Hello, this is Greg Salley. I'm here with John Long, and we're going to take you through our Equity Platinum Fund Investment webinar. We're going to walk through some of the overview of the investment. However, if you'd like more details, please request our offering memorandum, which will walk you through the investment in much more detail. As an overview to the investment, we're raising $50 million to acquire 20 homes in a variety of locations in and outside the U.S. The minimum investment currently is $161,500, and our homes are professionally managed, which really frees you as the investor from that responsibility. As an investor, you can also receive dividends and rent-free vacations as part of your investment. And after 10 years, we plan to liquidate the portfolio and return investment back to investors, with 20% of the gains going to the fund manager and 80% of the gains going to the investors after all the investors have first received their original investment back. We offset the operating costs by renting the fund residences when they're not occupied by the investors. And we leverage strategic partnerships to give our investors access to hundreds of luxury residences around the world. And we'll talk about these more as we go through the presentation.
So this chart outlines our historic timeline. And Equity Residences, we launched our first fund in 2012. It was the Equity Villa Fund. We subsequently grew that fund to 10 residences and 100 investors and closed that fund in 2016. The Equity Platinum Fund that we're talking about today launched in 2016. We actually put our first property under contract in Montalani in 2015 for that fund, and then acquired our first property in Lake Tahoe at the North Star Resort in 2016. That fund is also now subsequently grown to, we're approximately 125 investors and 25 million in capital raised. And that fund, we're going to continue to fundraise. And our goal, as Greg had mentioned earlier, is 20 properties and approximately $50 million in capital.
For those of you who have questions, feel free to use the chat function. We may not answer them along the way, but we'll circle back at the end and go through a Q&A.
So today, what we're going to talk about is the homes in our portfolio, along with some upcoming additions that we'll be adding later this year and into 2021. We're going to talk about our investment philosophy, the annual expenses and returns of making an investment with us. We'll dive into a little bit about how much you can save per vacation night, and then how you ultimately make money with us through an investment. And then we'll talk about how you use the homes, and then the experience that you get when you vacation through Equity Residences.
You can see on the map that our homes comprise a number of regions, ranging from Hawaii to the west, mountain properties in Tahoe and Park City, East Coast beach properties in Florida and the Caribbean, properties in Mexico and Costa Rica, as well as European properties, including Tuscany, Italy. And we're continuing to add to these properties across these regions. One of our regions we have is the Caribbean. And in the Caribbean, we currently have 4 homes. We have Turks and Caicos, which we added last year. We have the Cap Cana Resort in the Dominican Republic. We have Little Exuma in the Bahamas, right on a white sandy beach. And we have St. John right on the water. And I'll tell you a little bit about each one of these. So with St. John, this was an interesting one where we realized that it took a while for properties to sell in that market. And so we identified several properties that we felt could work for us. And as a result, identified a handful and started making very aggressive offers on them. The one we ended up acquiring is pretty special because it's right on the water. It has a very estate-like feel when you go into it. And it had been listed at $4.9 million. We actually acquired that for just under $2.5 million, so almost at half that price. And that was, again, because we found someone that really needed to sell, get liquidity, and we had that liquidity where we could close on the property and allow them to have that cash. As we look at Turks and Caicos, what makes this really special to me is just the turquoise water. It's some of the most beautiful water you'll see anywhere. And again, this home is right on the water. You can go, you're on a marine reserve actually, and you can go out into the water on a kayak or paddleboard or swimming, snorkeling. It's just beautiful. The Cap Cana Resort, we actually have a staff there. We have ocean views from the property. We're on a golf course, one of the most beautiful golf courses in the Caribbean. And the Bahamas, there I mentioned the white sand beaches, but we also, if you take a boat out, you can take your boat onto a private island or private sandbar, hang out for the day, and there's a local custom that if whoever gets their boat there first, they have that sandbar, that private island, so you can really have a secluded getaway.
In addition to the Caribbean, we have other East Coast centric beach properties in Florida and Mexico. We have 3 properties in Florida in the portfolio. They include Captiva Island, Florida, Rosemary Beach, and Key Colony Beach, which is in the Middle Keys of the Florida Keys. And then in the portfolio currently, there's 1 Mexico property, which is in the Riviera Maya in a charming beach town called Akumal, which is halfway between Playa del Carmen and Tulum. With respect to our Florida properties, 2 of them are on the water with private docks. So both Captiva Island and the Key Colony Beach property have boat docks out back. And through Equity Residences, we can facilitate boat rentals so that you actually have a boat for the entire week while you're there. The Florida Keys, that's definitely something you want to do. You're able to take the boat out and travel up and down the Middle Keys, and it's a pretty wonderful experience. The Rosemary Beach property, it's on the 30A corridor. We're in a small private gated community, and the community has its own private beach there in the Panhandle of Florida. The property was one that we renovated. In a few minutes, Greg's going to tell you the story about the acquisition of that property. It's one of the opportunistic deals that we found and created value for the fund. This property turns out to be an investor favorite. It's 100 steps from the beach, beautiful house with a private pool with just beautiful sand and beautiful water that frankly has really become one of our partner's favorite little beach homes. Now, personally, my favorite beach home is the Akumal house here that you can see. And through this photo, you can see that, yes, the house is sitting clearly right on the beach, private pool, right behind that hammock. Hammock is his beach, and it's a turtle nesting beach. So what's great about this house in Akumal is that you can walk along the beach at night, and during the turtle nesting season, whether you're on the front or the back end of that, you'll be able to see turtles laying eggs or the eggs hatching and the turtles running to the sea. Then year round, if you don't get to see the nesting or hatching, you can actually snorkel out in that bay, and there are turtles abound, and it's just a magical experience.
On the West Coast, we have a number of homes in Hawaii. So one of our homes is in the Manalani Resort on the Big Island, has access to a local private beach with beach club. We have views of the ocean over the golf course, really beautiful little community. We also have one for the Platinum Fund in Poipu. This is a penthouse in a resort. So it has an elevator that opens right into the penthouse, 4 bedrooms with sunset views, short stroll to 2 different beaches. One of my favorites is actually our Costa Rica home. This is in a private gated community with 24-hour security, right on the water, right on the sand with sunset views. And then we have on the Big Island, we have one in Kona with sunset and ocean views. And we also have one in Maui, right on the Kapalua Golf Course with sunset and ocean views. And then one up in the Princeville side of Kauai which is just one of the most beautiful places in the world. It's just gorgeous scenery there, beautiful beaches and ocean and nature. So it's an amazing collection of homes.
Next up are our city and mountain residences. We have 2 properties in Park City, right on Deer Valley Drive. They're walking distance to Old Town Park City and a short shuttle right up to the Deer Valley Resort. We have a 4-bedroom and a 6-bedroom there. Fantastic residences, great during ski season, and also a partner favorite during the summer. Our Texas investors tend to get out of the heat and spend their summers in Park City. In addition to the Park City homes, we have a ski in, ski out residence in the North Star Resort in Lake Tahoe. This was another example from an acquisition perspective that was a developer negotiation, and Greg's going to talk about that in a few minutes as well. From a Siena, Tuscany, Italy perspective, we have a penthouse apartment in the old walled city. This was a nice find on a property acquisition trip when we were out in the countryside of Tuscany and stumbled across an old historic apartment that was being completely renovated by the developer. So that we have a luxury penthouse that's charming inside the city, and also has become a partner favorite with respect to all of our partners taking European vacations and using Siena as a hub.
As we look to add new additions to the portfolio, some places that we're looking at on the East Coast include some drive-to destinations such as Kiowa Island in South Carolina, adding more in South Florida, such as the Florida Keys, as well as another popular one we get requests for is Grand Cayman in the Caribbean, and we'll continue to grow and add to the portfolio as we build out towards 20 or so homes.
Similarly, for other West Coast beach acquisitions, we've done extensive due diligence in Los Cabos. One of our favorite little communities there is Puerto Los Cabos, that's closer to the San Jose side, and all of the foodie restaurants in that kind of arts and wine district of Cabo. Also looking in Punta Mita as another potential beach Mexico destination. And then Maui is going to be our next Hawaii acquisition. So we have 2 properties on the Big Island, 2 on Kauai. We already have 1 on Maui in the first fund, and this would be our next Maui acquisition that would be in the current Platinum Fund.
We're also looking at adding more city, mountain, and leisure destinations, including several drive-to locations. We're looking in the Rockies at places like Breckenridge, Aspen, Vail, or Jackson Hole, or Big Sky. We're looking at city destinations such as New York and Paris, and then also some leisure locations such as Napa, Sonoma, up in Northern California. Some of the locations you can get through our affiliates include places like the Four Seasons, Avalara, and San Diego. You've got places in Viceroy and Anguilla, Mayacoma and Sonoma, Esperanza down in Los Cabos, the Ritz-Carlton Destination Club in St. Thomas. And I've actually stayed at some of these myself. I've stayed at Esperanza. I've stayed at the Ritz-Carlton Destination Club in St. Thomas. And I have to say, these are top-notch homes. Many of them are resorts where they have multiple villas in the resort, where you can have anything from a 2-bedroom to a 4-bedroom villa, enjoy it with your family, stay for a long weekend or a full week. And then we have Third Home, which typically is more individual residences. They have over 11,000 in their network, average value around 2.4 million. And between these 2 networks, you're virtually covering almost any location you can think of around the world. And you can see just some of the examples, and I stress that these are just examples of some of the hundreds and thousands of locations all over the place.
So We always get the question, will the homes be available when I want them? Because clearly, if you're making an investment in vacation real estate that you plan to use with your friends and family, you want to be able to have access to your own homes. And so the answer to that is yes. Our model is set up that it really works, that our investors do get the weeks they want. And frankly, our rental model that we have actually facilitates that, in which in many cases, some people think it's the opposite, that they're competing against renters. But what we do have is priority investor access. And because we have renters that use our homes that help offset your costs, because they're covering the lion's share of the operating cost of your homes, then there are fewer investors really vying for those coveted weeks. So what happens is that across our entire portfolio, only about 40% of the weeks are actually used by investors. And as Greg just articulated about the affiliates, Elite Alliance and Third Home, a lot of our investors are trading out and using those Elite Alliance and Third Home visits because they want to go to Europe and actually get a flat in London for the week, or they want to go to South America and go to a Nicaraguan surf ranch. So they have those capabilities. So typically what happens is that through our reservation process, only about 15 to 20% of the weeks are actually taken, which leaves a vast amount of the calendar open for investors to book their second or third trip, take the trips they want, and not be stressed about having to book trips a year in advance. So our model does allow you to book 12 to 18 months in advance and get holidays. If you need to book Christmas, Christmas is open 12 months before, so you can book that Christmas a year in advance. But it also is flexible so that investors that really just want to book their travel 3 months out, 4 months out, our calendar is still available and our investors can do that. Now, for investors that are doing travel last minute, and if you book 30 to 60 days out, you actually can do that, and you can do that without using your credits. So we have short notice trips on space available basis, both through our homes and our affiliates, that provide all sorts of value add with respect to if you want to travel 30 days out and you want to go to a beach destination in Mexico, our network can facilitate that, and you don't have to use your allotted weeks through your investment, and instead you just pay a nominal exchange fee, which typically for a week on the beach in Mexico would be about $6.95. And that would be an extra, call it a bonus week, in addition to the allotted weeks you might have for your vacation. So here's an example of a 2-unit investor. So our model is not a set number of nights that you get with your investment. We have a credit system, so you get an allotment of credits for each level of investment. Now, it's purposeful. The credit model is built so that it's equitably across all investors, you're going to get similar types of usage. A Christmas week at Mauna Lani in our $3.5 million house might be a $5,000 a night trip versus going to Costa Rica on the beach during the spring, which might be a $1,000 a night trip. So it allows you to choose your own adventure and allocate your credits for the types of vacations you want. Typically, a 2-unit investor, you could allocate those 280 credits anywhere to just receive 7 nights of vacation up to 45 plus nights of vacation per year. This example is a 21-night allocation of those credits. So this 2-unit investor is doing Easter in Siena, where they used 40 credits. They also went to Thanksgiving in Costa Rica, which was 55 credits. I personally, I can attest, I spent 2018 Thanksgiving in Costa Rica, and it was fabulous. Our Thanksgiving dinner was fresh caught mahi-mahi that we went out and caught that morning and then grilled up for Thanksgiving. It's fantastic. What you can also see here is the investor used 110 credits for a July week at Turks and Caicos in the summer. And then an additional 75 credits for MLK week in Kauai in our new Poipu penthouse. So here's an example where there's 4 weeks, all at different credit values, weeks ranging from 40 credits to 110 credits that allow an investor to kind of experience what they wanted to in a given year across all these different properties.
We have a question about explaining the priority access a bit more. And what that means is that As an investor, you get to book your weeks, and then after you've booked your weeks through our reservation process, we will fill in the calendar with renters, Third Home and Elite Alliance users, and that allows us to get good utilization of the homes, while at the same time, because you have that priority access, making it so our investors are able to get the weeks in the homes that they want.
Thanks, Greg. This next page that I pulled up illustrates the access that we have to private clubs. So many of our residences, we have also negotiated access to private clubs associated with the resorts where our residences are located. So one example is the Tree House. So North Star Resort, our house sits right next to the Tree House, which is a luxury private club, mid-mountain, right underneath the Ritz. Has a lounge, a game room, a swimming pool, a sauna, spa, fantastic place to take the family. Whenever I've been at the North Star House and with our group of friends and family, everybody after a ski day wants to run up to the Tree House and socialize and play. And you know, even though our house itself has its own private hot tub, the kids want to run up to the Tree House and play and use the hot tubs at the Tree House. So it's a great experience. An even better experience is the Eden Rock Beach Club. This is one of the premier world-class beach clubs in the Caribbean. It's exclusive, private access. The Eden Rock Hotel manages the beach club. We have a membership for all of our investors and guests so that you have unfettered access while you're staying at the residence. Our home is just a short golf cart ride away from the Eden Rock Beach Club. The home that we have there does have its own private pool and staff and ocean views, but you can get on your golf cart and come right down to the private beach club in a couple minutes and spend your days there. Similar to that is the Montalani Beach Club, which is another fantastic place that when you're staying at the Montalani residence, there's also a golf cart there, a 6-passenger golf cart, and an easy golf cart ride away. You're at the Montalani Beach Club, which is a fantastic place for young kids. It's a great swimming beach and a great place to just spend the day while you're at the residence. So on top of just private clubs and access, we also have some on-site staff experiences at our residence. So I kind of alluded to at the Cap Cana Resort at our house that we have a staff. So there is an on-site casita there with a live-in butler and a maid, also optional live-in chef if you'd like to select that. Augustine, you see here in the picture, he's fantastic. He's our caretaker. He's the butler. He waits on you hand and foot. Our investors always come back from that trip raving of the experience that Augustine has provided while you're there in residence. And the investors that have selected the private chef, Julio is our private chef that will show up and live in residence while you're there. He will cook you 3 meals a day, and it just makes the experience just over the top. Aqua Mall has a similar experience. There's an on-site casita with a caretaker and maid. It's a family that lives on property, takes care of the house for us. And Letty, who lives on site there, she is also a cook. And if you want a traditional Mexican breakfast, she makes the best traditional Mexican breakfast I've had as I've been in the region. It's a fantastic way to start your day there. And then in Costa Rica, we have a full-time maid. And then similarly in the Bahamas, that house, as we launch that, is also looking to have staff that we will provide for our guests when you're there.
We have a concierge team consisting of Natalie and Taylor, and they've developed dream trips for each of our locations. What these allow you to do is really have a turnkey itinerary for a new destination maybe you've never been to before. And you can also customize this. This might be your starting point, and then there's certain things you want to add, certain things you want to take away. But these are experiences that several of our investors have already tried. They provided feedback on, and just to ensure that you can have a great time at each destination you go to. This particular example is for the Big Island of Hawaii, our Montalani Resort home, and I've actually done a number of these activities. If you make it to the Big Island of Hawaii, I would absolutely say you need to go either snorkeling or diving with the manta rays. I mean, they're just beautiful, huge, and they come and do belly rolls right up next to you. Also, the volcano on the island, sometimes it's actually active, and you can see lava flows, see them going out into the ocean, which is a pretty amazing experience as well. And then some of the local Hawaiian culture in terms of the shows, of course, the beaches, and then also the luxury amenities in terms of spas and golfing and that sort of thing. We also customize these to each location. So some of our locations are really good, deep sea fishing locations, for example. Actually, Big Island is one of those where they have excellent deep sea fishing, and we can arrange for an excursion for you to go out into the ocean. And as John said, catch your dinner.
Yes. Before Greg jumps into the investment, I want to answer one question about somebody asked if you can gift your usage to friends or family. And the answer is yes. We do not have any restrictions with respect to unaccompanied guests. So if you as an investor want to send your brother, you want to send your parents, you want to send some friends, or if you want to use it for, send business colleagues, you can do that. So you can book the trip for anybody. The house, you are an owner of the property, and you have that right to send friends and family. And it's the same thing is true with our affiliates. So with your affiliate access, you can book a trip through Elite Alliance, potentially at the Auberge, the Esperanza Resort, and you can send friends and family on that trip as well.
We also had a question, is the concierge service included? So our concierge team is included to help you out. Obviously, the specific groceries, if you want your groceries pre-stocked, would have to be paid for, or the chef would have to be paid for. But the service itself of helping you with arranging those and providing those recommendations is included. Let's talk a little bit more about the investment. So the fund owns the residences outright, and this is key. This is what makes this a lower risk investment compared to a lot of other options out there. We also do, in fact, own the residences. We don't have long-term leases or that type of model. Our model is designed that as we raise our $50 million, that greater than 90% of the capital is invested in real estate, and then we plan a portfolio liquidation and profit distribution in about 10 years, so around 2030. And our model gives us some advantages in terms of being able to buy assets with cash. This is oftentimes necessary in some of the foreign markets. It allows us to opportunistically get deals done fast, and with no debt, we're not worried about being underwater. Let's talk a little bit about our expertise that we bring to buying properties. So, I gave you an example earlier of our recent acquisition in St. John. We have a number of different strategies we take. We do a lot of analysis on markets before we pull the trigger and buy homes. And a few more examples are we bought at market lows in Tuscany where they were at 15-year lows, and we were able to buy a luxury penthouse in the center of Siena in a UNESCO protected building where you literally walk out onto the cobblestone streets, but still have all the modern amenities. Well, it took a lot longer in Italy for them to work through foreclosures and for their real estate market to start to bounce back. And as a result, we took advantage of that. And we found a developer that had redone the interior of the building, had one unit left, and before the financial downturn, wasn't able to sell it. He wanted to get out and move on to a new project, and we were able to negotiate an opportunistic deal there. Another example is Rosemary Beach, Florida. So this was a case where the seller was trying to complete a 1031 exchange, which is a tax-deferred exchange, and they were about to lose the property they were going to exchange into because their buyer couldn't perform. We had built relationships in the market, and as a result, we were the first point of contact, and we were able to do a all-cash 9-day close. But we did that in exchange for a $200,000 price reduction over what it had previously been under contract for, and we were enabled the seller to go ahead and complete their 1031 exchange. We got a great property at a great price, and then we went in and actually remodeled and upgraded that home. And it's become, as John said, one of our investors' favorite homes. Another example is developer negotiations, where in Lake Tahoe, we negotiated price concessions that resulted in a net pricing of around $2.95 million before we even closed on that home, and we did an extended close that took us about 6 months 2 identical residences that were near this home closed for as high as $3.55 million before our home even closed, providing an immediate $600,000 gain for the fund. So as you can see, there's just a variety of techniques and approaches we use, very market dependent, depending on what type of opportunities we see. In terms of the actual investment, our current minimum investment is a 1-unit investment. The price for that is $161,500. We have folks that have gone all the way up to 3-unit investments, which are $484,500. And with that, your usage will vary a little bit, as John said, depending on if you're staying at a $3.5 to $4 million home over Christmas or a $1.5 to $2 million home in the summer. You would have a lot more weeks in the summer at that $1.5 to $2 million home, because we're trying to get everyone to have relatively equal value from their investment. But in terms of the vacation value, you would expect to see a vacation value for a 1-unit investment that could range from $12.5 to $17,000, or $38 to $55,000 all the way for a 3-unit investment. And it can really go up from there, because we have the bonus use as well that we've talked about, where you can add up to 30 days out to Platinum Fund homes, book a home with no credits, up to 45 days out with Elite Alliance, book a home with no credits, and up to 60 days out with Third Home Chairman's Club, book a home with no credits. In terms of annual fees, you can see the range there. The reason they all start out with 0 is you always have the option that you can return half your credits each year and eliminate that annual operating fee, still have half your credits left to book a trip, or if you want to pay the annual operating fee, you'll actually get an even higher ROI, because the value of the trips, extra trips you'll take, will be much higher than that actual annual operating fee.
So now I'd like to just walk us through a 2-unit example of the investment and the investment returns. That 2-unit at the $161,500 per unit price is a $323,000 one-time upfront investment. With that is an allotment. We talked about credits. It's an allotment of 280 credits, which is around 3 to 7 weeks of annual usage, plus the unlimited space available that Greg talked about. Somebody had asked a question about those credits and asked, are the credits for full weeks? So most of our trips are 7-night, week-long trips, and they have certain check-in, check-out dates. We do have some properties that we've split, and it's typically the drive-to location. So like in Lake Tahoe, you can split that up, and there's the 3- and 4-night options that are available. Our affiliates have done that. So through Elite Alliance, all of their weeks are 3 and 4 nights. So when you convert your credits to Elite Alliance, if you're looking for a 3-day weekend or a 4-day midweek, you can do that through Elite Alliance. So continuing on with the example, as Greg had mentioned, there's a no annual fee option. So annual fees can be offset through a partial reduction in vacation usage. So for each level of investment, when you return half your credits, you pay no annual fees, and you then still have credits left to take vacations. So then what you'll see here is that you're going to receive $24,000 to $35,000 of vacation value annually, which is a 7.5% to 11% annual return. And then there's also a dividend opportunity based on excess income. So the way it works is that we've ensured that our investors don't have carrying costs if they're not taking vacations. And then on top of that, you can share in the profits of the portfolio, because if you're not using your weeks, that means we're renting them, and you as an owner should then get to participate in those excess rents. So as we've said, you return half your credits to eliminate the annual fee. If for whatever life reasons you're not traveling at all in a given year, you can return the other half of the credits and then participate pro rata with the share of excess rents, which would be a dividend at the end of the year. On the chart on the right, you can see that the $323,000 upfront investment results in a $424,000 return of capital at the end of the fund. And then in addition to that, a net vacation value of $352,000. So really that $300,000 investment produced $700,000 to $800,000 in total value over the 10-year term of the fund. So then the question is, what's the fine print? right? And so what are the annual expenses? So we've kind of talked about that, right? The annual fee is a little under $3,000 per unit. There's also a nominal visit fee. So our investors pay for their out-of-pocket expenses when they're in residence. Most of that is cleaning costs. So if you go visit a residence, you're paying $495 to $895 for the entire week, which helps cover your out-of-pocket operating expenses, which then is fair across all the investors so that you're covering your cost while you're in residence. On average, it's about $100 a night, which is the next question. What is my average cost per night? So you have that visit fee, which ends up being about $100 a night. But there's really no per night cost. So the answer is there is no per night cost, right? You have an annual operating fee and you have the visit fees for taking vacations. That effective cost per night ends up being $100 to $480, depending on whether you pay that annual operating fee or not. Now, and when I say it depends on whether you pay the annual operating fee, the truth is if you pay the annual operating fee, you end up with a higher return on investment because the resultant vacation that you're going to get from paying that fee far outweighs paying the fee. So what we've found is that there are some investors that want to write a check and never write another check. So we've provided that option. Most of our investors are opting to pay the annual operating fee because they would rather take that vacation and they're seeing more value in the vacation than the fee.
Or alternatively, you might have someone that for some personal reason they can't travel in a given year, and we didn't want someone paying a fee for something they're not using. So if you can't travel in a given year, you don't pay a fee at all, and you'll still have credits that you can send family or friends on a trip, or you can actually roll credits over into ThirdHome or Elite Alliance and use them in future years. So there's ways that you can extend the use of those credits.
Yeah, thanks. Next question: how do you make money? Well, when we sell the homes, you get your initial investment back and then your pro rata share of the profits. And so it's a very equitable model. And frankly, when we sell the homes, all the investors go back to our LPs first until 100% of invested capital is returned, and then the profits are shared between the LP and the GP. We've already talked about the homes. Will they be available when they want them? Discussed that a little bit earlier. And then how much do I get to use the homes? And it just depends on your preferences of location and seasons. As you can see in that 2-unit example of an investor, it's a pretty wide-ranging amount of vacations that you can take. And particularly if you use the space available or not, it just adds extra weeks. That many of our investors are booking, significant amount of extra weeks just through the space available access. So I've already started to talk about that example of whether you pay your annual fee or not, but here's an example at our North Star residence, that value per night, right? So that our house rents for about $2,300 a night during ski season. If you pay your annual operating fee, so if you paid that $3,000 annual operating fee as a 1-unit investor, and then for this house, that visit fee is $895 during ski season to go visit this house. So your out of pocket for that week is about $550 a night in relation to the $2,300 a night value per night that house would have cost to rent. So in this case, even those that are paying their annual operating fee are seeing tremendous value, which is why folks are paying that fee, because they can pay their annual operating fee and then get another week at North Star that's a $15,000+ week. So it just makes sense. Now, in the example of the investors that aren't paying their annual operating fee because they don't need as many vacations, then this same week that is valued at $2,300 a night, you're only paying that $895 visit fee, so your out of pocket is basically $128 a night, which is just extraordinary value. So our investors are all experiencing that. Here's an example here of Andrew, one of our investors, that at the end of the day is super happy with making this investment both in real estate and in vacation value.
And our investors really run the gamut. We have investors that are business owners. We have investors that are in the medical professions. We have investors that are financial advisors, like the example of Brian here. We have private equity fund managers, like the example of Kevin. Really ranges the whole gamut. We have folks in the United States, we have Canada, Europe, Middle East, Asia. We have investors from really any part of the world, although heavily predominant to North America. And the reason they've invested is because they want to have amazing trips and experiences with their families, but they also want to do it in a way that's just really smart in terms of how they allocate their investment money and their funds, in a way that they're also building for their future and the future of their families. So a bit of a summary here. When you make your investment, you're making a one-time investment that starts at $161,500. You can go up from there. We've had folks go as high as 3 units, as I mentioned. You get a preferred return in the form of the vacation usage at luxury residences around the world. You have the option for no annual fee and actually an opportunity to even earn cash dividends based on excess income of the fund. We expect long-term capital appreciation with an expected return of 1.5x the capital you put in. We have a diversified investment through holding a portfolio of luxury vacation residences, and we've added value through these short notice vacations. Now, a question we had come through is, what if the market's down in 10 years when we go to sell these homes? Well, we actually have the ability to extend for up to 2 additional years if we need to, if we're in a down real estate cycle, to really wait till we're out of that down cycle and make sure that we're focused on getting to those gains of 1.5x return on capital. We're going to jump into the Q&A, and there's actually a number of questions that have already come up as we've gone through the presentation. One question is about buying homes in Europe and Asia, and if we have any plans or intention to do that. A lot of our focus on where to buy homes is based on where our investors are joining from, what our investor preferences are, and also that relates to how easy is it to get to those properties in terms of distance and flights and whatnot. As a result, we are adding some in Europe. In the case of Tuscany, we plan to add more. We give the example of Paris. But not so much in Asia, just because of the distance to get out there. Now, having said that, that's where our affiliates really come in, because they, with their thousands of homes around the world, you have a number of choices in Asia, a number of choices in Europe. For example, I have it on my list to go skiing in Japan, and so I'm going to book a trip through ThirdHome or Elite Alliance to allow me to go out and do a ski trip there. But that's probably not a destination I would go to every year just because of the distance. It's probably more once in a 10-year type trip, but definitely on my bucket list. And there's a number of other places that are exactly like that example, where they're kind of bucket list places you want to go once over the course of the 10 years, but you're probably not going to be flying out there every year.
So another question came up about, when are our new homes going to be available that we talk about in the future portfolio? The Bahamas property is slated to be the next addition to our portfolio before year end. We're hoping to allow our investors to spend Christmas in the Bahamas. And then after that, we've shown that we're looking to add that West Coast beach property and or a mountain ski property early next year.
Yeah, so as we add those properties, we try to add them in the optimal time based on their peak seasons. So as we look at winter beach destinations and mountain destinations, we'll try to add those typically in Q4, as we did this past year with Turks and Caicos and St. John and Poipu and Kauai. For some of the leisure destinations, places like Tuscany, we added that actually in March because we wanted to add it ahead of the high season, which is kind of spring break through summer. As we look at other leisure destinations like Napa, Sonoma, or Paris, we'd look at kind of the same timing of a late Q1 addition to the portfolio. We also had the question asked about have we ever done a capital call, and the answer is no. We have a very robust business model that's really allowed us to operate with not only very low fees and due to offsetting with rental income, but we've been able to operate with no capital calls required, and we do carry reserves. We're well insured, so that we really don't anticipate any reason that there would be to do a capital call. One more question that I had is, there was a question about how do we make our money. And so number one, as the fund manager, we've really aligned our goals that as we grow the value of the portfolio, when we liquidate, we first give you back your original investment, and then 80% of the gains go to our investors, 20% to the fund manager, to really align our goals of growing the value of the portfolio. And we're really motivated to make sure we're making smart selections in terms of the properties we acquire, looking at factors like appreciation potential, what's the investment thesis, what are the cap rates that would allow us to do that.
Well, that's about all the time we have for now. We've got if there's additional questions we didn't answer, we'll reach out personally and make sure those get addressed.
All right, well, thank you for joining us, everyone.
Thanks, everyone.